Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording about an hour after the close on Friday, March 14th. After the week that we've been through, next week we have St. Patrick's Day on Monday, FOMC on Wednesday. So,
And
and
hangover
one of
on Tuesday.
some people may just stay drunk from Monday to Wednesday, and that may be the best course of action. Anyway,
Yeah, yeah.
what can we look forward to? What are we going to do? We need to dive right in. As you know, there's been a lot of movement, a lot of things going, and we're going to
Mhm.
pick up from where we left off on the midweek update. My name's Ben Maldonado, and I'm going to turn it over to my partner Barry Hederachi, who's got the S&P 500 cash up on the screen.
So picking it up from the midweek show, we talked about this 55.82 being sort of a support area, and give or take a couple of points, but didn't quite get off of that. But we hung around there a little bit longer, and well, today we get a nice bounce off of that. So I think the way to structure this whole thing is, if you look at it from, we didn't quite go 90, and I think that would have been a proper place to go
What
for
did we do?
good
End up
support.
doing 72?
Yeah, about that.
Hmm.
So 90 would have been 54.24. Let's take a look at 72 now that you brought it up. So what I thought was here, 72
Let's
on
see
there.
what 72. Yep,
So
there you go.
72 was right there by the 82, but we dipped a little below, but that's all right,
Hmm.
and
Hmm.
continued higher. So my thinking is just to lay down sort of the map. I think it would be great if this 90 is completed.
Hmm.
If it isn't, I think the odds of this next rally also getting sold at some point is the thing to really watch for.
Sure.
After all the things we've been talking about ever since, the December big cycles came in, the January cycles, and I feel like, yeah, okay, this is all right. Now this little bit of a correction, but I feel like the fact that it took so long, and we kept saying, this keeps looking like distribution. What's going on? What's wrong with
Yeah,
this?
yeah, yep.
And I feel like there's more to go. And the fact that we didn't quite get to 90 is a sign of that. I mean, I think if we
Hmm.
got there, okay, fine, we could work with that. So my thinking is we want to really, yeah, sure, trade the upside because the lows are good, and which is what we were doing on the intraday charts and 30-minute charts. But on the big picture, we want to see where this thing will get stalled out on a basis daily. And that stall out, the only way to really do that is to look for the next reversal. That's the cleanest way, right? Now, if the reversal comes off of a key level, well, that's even better. That's what makes it sort of complete. And here, the really important level is really the 50% of the square, which is at 57.83. So 57.50 to 57.83 becomes a key level to watch next week. And that's if we get a really good bounce, right?
Hmm.
And if we have enough juice to get up there. Seems like we might. On the way there, we have this 56.73 is really the number to watch on the way up, because that's where we really came and stopped hard on the way down, which also kind of corresponds to the highs we had back in July. So this level is important. And getting above that and sort of, settling above it would mean that we have a good shot at testing this 57.50 to 80 level. And the reason I put the 90 here is I wanted to see, where we were. You always wanted to see how the market did based on the squares that we're using. So it
Hmm.
didn't, I feel like it didn't quite complete. 72, sure, we kind of went a little past that. So it's, to me, I feel like it's incomplete.
Hmm.
And if you look at it from the lows in September, October lows, this 57.50 level comes up, it's 57.55, but it's right in there, right? From
Hmm.
this 270 degrees up level. So it all sort of lines up because the geometry is good here. And if we go from the false break low, it's right around this 56.73. So we can work with that. So really, those are the two key levels to watch, 73 and 57.50. If we stall there, reverse, I think it might start the next down leg.
Hmm.
Of course, it's not that simple. We're not, it's usually much more complicated. We might go up here, consolidate, false break, do all kinds of nonsense before
Right.
rolling over. Or, it might be a clean, like a second wave kind of a move, clean two.
Hmm. Hmm.
Either way, those are the two key levels to watch on the cash. And we'll unwind it from there. If you guys look at the continuation chart for the E-mini, the key level is really 57.50, 57.51 I have on the board. 56.82 is another number. Somewhere between these two, this is the zone we're watching. Now, does it mean we can't get above it and still reverse? Sure, we could. We could go all the way up and make a lower high at the 50% level and reverse.
Yeah, it's true.
Market can do anything.
Hmm.
6100 level and reverse, and it'll still be a lower high. But we're trying to see if there's some juice left in this, and let's see what kind of relief we get from this rally that's happening right now. Moving on to the Dow. Again, we kind of slipped a little bit below where we should, but didn't quite get to where we should have been going. So I feel like this is unfinished business, and that's why I'm sort of looking at it through a different lens. So 41,902 is definitely where the zone starts, and this 42,500 level is 216 degrees up from the September October lows, and we want to keep an eye on that. The other thing we're noticing is, you want to look at this move down here. Dow going down for 36 days would bring it at the end of the month, March 28th. Something to notice.
You know, the other thing I'm noticing, Barry, is that
Mhm.
when you were pointing out all those, the month long, months long distribution, that's all now really big overhead.
Yeah, absolutely.
We just haven't had that in a while, that kind of structure.
The last time we had even something close to that was back here that I can see on the chart was 2021 when we had all this overhead up here, after that first break, we came back and you can see we did have that overhead above. Not exactly the same, but similar, right? And then we came for the final time before the bigger move down. And
Hmm.
they were all, we had all this stuff sitting on top of that structurally. It's really right about there, right? The
Yeah.
big heavy.
Yeah. Yep.
So yeah, you're right. We're not even quite up to that. And that level, if we were to just take sort of that example, we'd have to get up to 58.92. But for now, we'll look at this zone and try to work with that. Here's a March contract, which I guess we're rolling over the weekend, right? Monday, we
I
start
think
fresh.
so. Yep.
All right. Either way, we're running both. So here's a March contract, and we did pretty well. We
Great on the timing. Look at
Yeah,
that.
very good on the timing. We stalled out at the 45, and this is really where the big fight was. So I think it's valid and it's fairly solid stuff.
Hmm.
And the angle held. So everything kind of lined up on the low yesterday. Yeah, we pushed a little lower than ideal, but that can happen. I'm talking about futures markets here.
Hmm.
Uh, Now I wanted to move into the
June.
yeah, June, just to kind of get a perspective on things. So June again, we're seeing this thing where it didn't quite get to 90. We stalled a little bit above, as if that's a completion. And then that's a little bit far from 72 and not quite 90. So I
Hmm.
feel like we're not quite done. Maybe even on a spike, we can come up and touch 90 or somewhere in that zone.
Hmm.
In the meantime, this 47, 57.40 is like the level to watch on the June contract. So 57.40 is the upper end of the buffer, and the 50% of the square would be 56.96. So 56.96 to 57.40 is another area where we can potentially stall out. If we can comfortably settle above this, I would say settle above the 50% level, which is 56.96. Then I think we could expect some kind of a move higher, maybe
Where's the 45? What level is the 45? That looks like a decent spot too.
that's almost a 50% level. That's 58.75,
Hmm.
58.76. So that's another one to watch. Yeah, that's kind of it. This is so for the June contract, these are sort of the levels to watch. Again, I think that the big deal is I feel like it's not quite finished, so we could have another. I mean, we're going to have another pullback anyway. Normally we would expect some kind of a higher low and then to move higher, but who's to say we can't do an ABCD up and then terminate, right?
Hmm.
And
You
the
know what's
reason I'm
interesting? Interesting about that June, Barry, is it didn't make a higher high. The high was in December.
Yeah, we held the high. Yep,
Hmm.
we held the high. And March pretty much did the same thing,
You had that
you
little
know.
poke. You had that
Yeah.
little poke, right?
No, no, March did the same.
Oh,
March didn't
March, it
quite
was
get
the
there.
continuous that had
Yeah.
the,
Yeah,
yeah,
continuous had it, but this contract didn't.
right.
So I rest my case. We were looking for this type of a price action. We got it. These highs never got the highs when the actual cycle highs came in, really
Hmm.
weren't taken out. So we'll have to stay with that. And I think we went over all the numbers. We called out the numbers. You guys can just check the tape. Move on to, let's take a look at the weekly.
Yeah, sure.
So again, the weekly, you see how it's sort of in between, not quite to the 50% level, not quite, you know, above 72. So we're kind of in the middle, and I feel like it's unfinished business.
Hmm.
And so 54.33, 54.42 is the 50% level, right? It just seems like we ought to get there at some point. Until it does, I mean, ideally, like the big number here, I mean, if you want to talk about overhead, it's really this 5,800 level, 5805 to be exact on the continuation chart. So you can see that's really where we're going to go up and feel the heat, so to speak.
Hmm.
But that's another way to check the sort of the strength of the market. If you can't even get up into that area,
It's really
um,
weak.
yeah, it's really weak. And this week's high and low is going to be important too. So we'll watch all of that. I feel like we're kind of in mid stride, so there isn't a whole lot to say other than, hey, let's watch our levels and watch the what's happening. We'll have
Hmm.
to watch how things unfold and then take it from there. And looking at the cash, I haven't put a square on this yet. I mean, in a while, because I wanted to see how this would unravel, and it is unraveling. With this kind of a break, sure we had a strong close coming into Friday, kind of expected, but that's a long way to crawl back, claw your way back up. So,
Hmm.
and here, really the resistance is around 59, 59, 40, 47, 59, 50 in that area. I'll put a square on it next week and look at it, in detail now that we got the break. I don't have to keep looking at this chart. And what else? We can look at a 30-minute chart, which was sort of the thing that we survived on this week. So
Look at the stair step down.
it was all, this entire leg was perfect as far as I'm concerned, because it
Mm-hmm.
gave us the levels to really watch and know where the market's going to be weak and where it's going to be strong. And eventually, with all this, everything happening, this 55.11 level held, which was pretty much a quarter of the square.
Hmm.
And the low held here. I was kind of treating this as a false break. This was a perfect low right on the square, ran up, came back, false break, and then rolled on up from there. So now, this is I'm looking at still the March contract. So this 56.25 level is the one to watch next week to see if we can hold above it or not. If we can hold above, then we can get up to 56.70 and 57.17 and on up, right? But still in here, we're not really picking up a whole lot of upside momentum. Somehow, if we can settle above 56.70, it'll look much better.
Hmm.
Even going up and coming back and holding above these levels will pick up momentum. So that's for the March, but let's take a look at June. So on the June, the same level would end up becoming 56.84. And we want to really basically hold above that is the idea. If we can't, then at a minimum, we want to be able to hold above 56.38. And above, we have 57.28. So 58.28 to the upside, we have 56.84 in the middle. And this will be sort of the bull bear line for next week.
For sure.
That makes sense.
Hmm.
All right. Anything you want to add? I know you're going to cover the NASDAQ. Anything you want to add to this?
No, just that you know it's a temporary, looks like a good temporary low, and watch the bounce.
Mhm.
Watch the resistance and see if we get a setup for a fat pitch because it looks like it is going to be setting up for a fat pitch if we make a lower high and fail.
Especially if we can get a lower high set up correctly on the weekly,
Exactly.
That's a big deal. Meaning,
Hmm.
if we go up into maybe 3 weeks or 3, 4, 5 weeks up into a lower high, For one
Yeah.
thing, if we go there and reverse, it means we have a lot longer to go. We might be down for a lot longer.
Hmm.
So everything indicates something. And we're
Um,
tracking it week by week. So
I mean, you can
uh,
look at the example in 22, right? We came down and then had a 3, 4 week rally up, lower high, and then boom.
yeah, exactly. Exactly.
Right,
And
right there. Yeah,
mhm.
right there.
You mean here?
Yep, right there.
Yeah, exactly. And they gave us a whole practically entire year.
Hmm.
And we might be, we could be doing something similar. So, and I was looking at, let me get to the, I was looking at, I was looking at this, and one way to find potential targets is to do sort of like a reverse ABCD. If you do that off of, looking at that 22 drop, equal move would bring us down to, 48.23. And funny enough, look where that level is compared to the high in 21. You see that?
It's perfect structure.
You see that?
If it
Right,
comes if it
right.
comes down there, yeah.
So that would balance that perfectly. And who's to say? I'm going to leave it on the chart though. It's like,
No, that's a good one.
mm-hmm.
What was
Well,
that? 48 something?
48.23.
Yeah, right in that 4800 area. Hmm.
Mm-hmm. Yep. It's important to watch these numbers so, we have we sort of clear-eyed going moving forward, right?
Hmm.
All right. So bonds managed, it hit the ABC target to the upside. We talked about that already. Came down to the 45, and boy, didn't we just kind of settle on that like a parrot on a perch, right?
Yeah.
So now the thing is, if that's the case, we're probably going to go up and try to test that area again. And thing to watch for is if that becomes a lower high. At
Yeah,
the
or
same
if
time,
the ABCD gets taken out, it could run.
if the ABCD gets taken out, we could run, no question about it. We could run in a big way. I
Hmm.
mean, we might be making new highs from where the square is. So 27, 28 might be in the cards.
Hmm.
But let's see. In the same way, 45 gets taken out, we're probably going to go lower.
Go down
So
hard.
go
Yep.
down hard. But
Hmm.
this looks like an area where it likes to consolidate. You can look at the past price action.
For sure.
Let's take a look at the weekly chart. Pretty much the same thing. We stalled. There's some support resistance level here between 1620 and 1720, but at 1 point bandwidth. And we're, not much. Last 3 weeks, we're kind of consolidating right in the middle of it. So basis the weekly, not much going on other than we have a lower low and a lower high this week, which means if the lows go, we have a potential downturn coming, and we also have a potential reversal set up here on the weekly chart. And that's something to watch. And we did hit resistant, hard, meaning really try to get through, right?
Hmm.
So we have to watch that. So that's up here, and if we take these lows out next week, you got to really watch out because the weekly is already set up as a reversal,
Hmm.
which is something we talk about a lot. Crude, well,
Talk about birds on a wire.
birds on the wire, man, forever. Birds forever. So we're back. Basically, we're still sitting at the 30%, 30-degree level on the
Hmm.
square. And, we were obviously this is support, so we could get a bounce off of it, but nothing really serious till we can get above 73.50. We're still kind of hoping we can get down here and flush everything out, maybe down into the zone, um, possibly getting into the 61, 61.50, 61.61, so where the line is. But up in this area, and a nice little flush would be great before we do try to do anything the upside. Otherwise, we could we'll just consolidate in this zone a little bit longer. But I'll tell you the range we nailed because this year basically we went from the range high to range low, which is
Hmm.
65 level here, 79.50. We have the midpoint 73.50. All the points are working beautifully. So not huge moves, but if you know the levels, the trading is not that difficult. Right, Ben? Here we have the big triangle chart, I'll call it.
Hmm.
We have the big, this big triangle, and I think this down trend line is, that breaking that will be the signal of the next move. Now we had kind of a false break, so you think we'd go out and make new lows, at least that 61 level, which would just flush all of these lows out.
Sure.
You know, that would be ideal, since we didn't choose to go. So let's see. So far, it's still kind of crunching. Now it's really crunch time. So we'll see how that works out. Far as the weekly square chart, well, I mean, we're back at support. So long as we're above that, we're okay. And that above number is 66.25, is 36. Let's say 36. And 66 quarter, if you want to remember it easily. So that's it. Not much to do.
Mm-mm.
Crude's just kind of being crude. Here's the other old weekly chart. Again, we're back at that zone. So you guys know what to do next week. Unless we take the lows out, then we can get busy. It could be a quick move down into that 61 area. Let's take a look at gold.
Another
Last,
breakout.
another break. Can't stop gold once it get
Mm-mm.
rolling. So last week we talked about how it's holding above, long as it holds above this 28, 28, 27, it's in good shape. We were looking at this potential lower high. So we have a high here, which kind of squared out, lower high,
Mm-hmm.
and watching to see if we'll even take out this quarter of the square. But nope, it held very well above, very sticking very close to the square level up here, and eventually broke to the upside. And this is the thing, once you break a square to the upside where it got squared out, this market's in very, very good shape, strong shape. So 59, 29.60 is the level you want to watch. And long as we're above that, I would say gold's in pretty good shape. And just looking, so any consolidations, we want to see it holding above 29.60. And I think that would be bullish. I mean,
Yeah.
like you were saying the other day, even if you come all the way down to 2,700, this thing's
You're
still
still
bullish.
bullish. Yeah.
So,
That,
so up here is we're talking sort of ultra bullish or hyper bullish if we
hmm
can hold up here. And coming into midway into this little triangle, let's say 29.19, 29.20, still strong, but above the square is definitely,
Settling above that 90 will be very, very bullish.
yes, which we have kind of already. So,
Mm-hmm.
and so it is kind of bullish.
Mm-hmm.
And the other thing was on the weekly, we talked about last week, we talked, look, we have inside week. So watch if we
The
take
high
out
and
the
the
high
low.
or the low,
Right.
it's probably going to go in that direction. And sure enough, we took out the highs and there it goes. So basically the weekly, really the next target is way up here. It's about 30.66. So
Mm-hmm.
if we can get up there, that's our next target. And that would be a good one. Let's see how that works out. And the corrections, consolidations have been very, very tight. I mean, here it's just 1 week and then inside bar and up. So it might have a hell of a lot more than 3,000. So let's watch it close. For now, that's it. I would say
Mm-hmm.
gold is trending. We had a chance to square here, and you can see that's why we stalled out for a little bit. And if that's all we get, this is very strong. And I mean
Mm-hmm.
long-term strong. So everything is, yeah, yeah, seems okay. So 29.60 on the daily. Let's take a look at silver, 270-degree up from the low in August, ends up becoming 34.40. It's really a matter of settling above that.
Mm-hmm.
I think the higher highs and higher lows, everything looks very good. We held the 50% level really well. You can see how we broke out to the upside here, came back test, came back test, came back test, and a
False
flush.
break.
Yeah,
Mm-hmm.
false break, A, B, C, D up. So it looks good. And I think any kind of a correction holding above, let's say 33.67, 33.60, market's in good shape. Let me put that line in there. Yeah, there you go, 33.63. So we want to hold above that. I think markets are very strong, can settle above the 270-degree level, which is 34, yeah, 34.40, let's say. Silver's in great shape. I think you're going to cover silver today anyway. I don't think I have to go anymore.
Nope.
You did that.
I got it.
You got
Yep.
it. All right. Let's move on to copper.
Also strong.
Very strong. Got above the square, and today is the first time we made air above the square.
Hmm.
485. We're at 487. Good enough. We talked about this correction when it was coming in. We said, it held perfectly above the structural support, indicating, very strong. And then, last week, this week, we held above the quarter, 462, very strong. And, higher highs, higher lows all the way. So, look, it's, I think the bull market in copper continues. If it can keep up, we're probably going to go up and challenge those highs. And from there, we'll see what we can do.
Hmm.
But even 180 day run wouldn't be bad, which would end up in the middle of
Middle of
April.
April.
Yeah. And trend lines, everything's holding. So things look good, and it's pausing enough. So it's not like copper's going crazy. Copper's being very, I don't know, pretty well managed.
Hmm.
Here, well, here on the weekly chart, what's happened is the 50% level is the one that we've been poking above, but not quite able to, get above in a solid way. And well, we got a good close above it today. So let's see if we can next week and mostly be above it. I think that'll be positive. Anything you want to add to copper?
No, but it's just thinking about everyone talking about weak economy, and they say copper, is a leading indicator. If it was going to be a super weak economy, why is copper making new highs?
Yeah, we should be down at the $3 level,
It's
not
just it's again
488.
why you can't why you have to look at price action and the key levels and not listen to narratives.
Absolutely, absolutely. So, and we've been, bullish in copper, ever since God, I can't remember, a few years, right? Um,
Hmm.
since 2020, really, and came back here. We're bullish, 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 and still bullish. We'll see.
It looks
Unless we
good
start breaking down, it's possible that we run up here again.
and
And
fail.
we can't quite get up into the 537 level. We somehow failed this, but I think, if that's the case, watch 480. That's the level we want to watch, basis the weekly. If 480 can't be held, then, then copper's probably doing something else. So for
Yeah, I
now,
mean, we do have
mhm,
resistance. I have monthly and weekly resistance around 5, so it's got to bust through that. But you know,
that's quite
which
a
is
bit. Yeah, maybe that's
yeah,
why every time, we kind of try to run up there and fail.
yep. If we can push through, then it can really run.
And what it's really setting up is this ascending triangle. If you drop a line, horizontal line here,
Hmm.
this ascending line here. So we have this big triangle that's setting up, which could just break,
Hmm.
um, break or break and fail. We'll see.
True.
We'll take it one day at a time. Next, I have the dollar. Again, what happened? I should call this week of incomplete. We could have gotten to the 60, but we didn't. And so we're kind of
Interesting.
hanging, right?
Yeah,
And the same
yeah.
thing with the stock market, same thing with number of markets.
Hmm.
So here the dollar, 102.75, 102, yeah, 102 three quarters would be, so another point down would be a good support, maybe 60 degrees down. Big resistance now is up above, it's around 106.50, 106.40, 650. So long as we're below that, we're still kind of searching out for a low. And who knows, if we square out here, that'd be amazing. That's on April 7th, and that's not too far.
No,
And that can happen. And, don't forget, before we dropped into this, we stopped installed exactly at the zone that we marked out, at the 2/3 line or 1/3 line from the high. It's pretty much where it's stalled. And the dollar's doing pretty good from there. Let me do the euro, and then I'll do both the weeklies at once.
hmm
The euro, I'm looking at it from the low to see how we might wind up. And
it's
as you
another
can
incomplete, right?
another, yeah. So we still yet to have completion. I think that should be our headline.
Hmm.
Um, so March, St. Patrick's Day, we have um we have 45 days. So that would give us a 45-day run up or correction,
Hmm.
and we might get to 90, and that would give us probably complete the 60-degree move in the dollar.
Hmm.
If not, 7/8 is right up in here. So let's see what happens. But I'm counting on that 45 to have some effect on the market.
Mhm.
We'll take it up from there. What else can I say? Yeah, I think a little bit more upside would be good. I'd like to see it at least get a little closer to 90. 72 is in place right now. So you see we're struggling there.
Mhm.
And so if you can't really settle above it or below it, it'd be hard to figure out the direction. So I think the timing will tell us what's going to happen next. We'll watch that. And we're kind of in that zone of the 108 zone, but the upper limit of that. Now let's look at the euro and I'll go to the dollar, weekly dollar. Here's a run up. Here's our 108 level and 109 comes up right about there. So we're at the limit of that 108 range. And we're close. We're close to resistance, pretty much finishing up this little correction or move up. That's my take.
Mhm.
Let's see what happens. Yeah, that's all I got for the weekly. So looking at the dollar weekly chart, we can see we're pretty much at the 90-degree level from the high. And you can see the lows quite didn't get to anything huge from the highs, but they did from the lows.
Mhm.
Anyway, what I wanted to talk about, I was looking at how we're still working within this range and get an idea well, perspective of the range. I did a square of the range. And if you look at that, 50% is way down here.
Yeah.
And so 50% level is down here, and that is 102.
Mhm.
So I would say, it's possible that we come down to 102 and then bounce. So there might be a little bit more, leeway to the downside. But we want to watch that closely.
I mean, look how many times it probed that 102 area too.
Yeah, it's been tapping that quite a bit, and
Mhm.
we'll see. And the other levels are like the thirds and all the other numbers that show up.
Sure.
And from here, we went past the 50%, so a little bit lower. Again, I feel like it's not quite completed, but
Mhm.
but currencies act like that. Let's see what happens next. But those are the in the weekly, I think this is the key level to watch. The other 50% does. And obviously we can look at the 90 and work off of that. Yeah, that's all I have for the dollar. And we talked about the euro.
Yep.
Let's take a look at natural gas. Not much other than, we're starting to, we're still making higher highs and higher lows.
Yeah. It looks to me like we're going to get a little correction because we're getting stuck under that 90 there.
Right? But so far we're kind of, it's on track, so to speak.
It could do like gold, right? Be a sideways
Hmm.
correction and then we
Hmm.
go.
Yeah. And if we can get about 440, I think then that's where the party really starts.
Agreed.
But
Off to
this
the
is not
races.
bad. But this is not bad for buyers putting in a bottom
Correct.
of some type.
Hmm.
What else? We have the
Hang
Hang
Seng.
Seng. Yeah. Pretty much worked out the way we pretty much worked out the way we talked about. And meaning, we wanted it to hold, if it was very strong holding above the 144-degree level, it's about 238.49. And otherwise, at least come down to, come above. Oh, that's where I got that line. Hold above around this level. And that's 23,393. And we more or less did that. We were kind of held above that. Well above the big support level, which is 22,709, 710, and it's back on up. So I think if we can sort of do a little back and filling and get on top of the 144-degree level at 23, 849, 850, Hang Seng's in pretty good shape. A lot of these things, ever since the lows came in, a lot of these stocks have moved really well in the Hang Seng market. So, and
Si-
there's a lot of capital flows that way too right now. So
Sure.
it's
Look at since the 504 time wise, look at
mhm.
how well the timing was. Every half square the timing
Yeah.
hit
It
really
hit here,
well.
started with this, hit here,
Yep.
tap,
Yep.
tap, tap, and tap.
Yep.
Yeah. Hmm.
Very, very well.
Yeah, we're back in
It's like
action.
a
Maybe
36.
because it sort of woke up, liquidity came back. If you notice, the bars are even a little bit bigger. You see the volatility is a
Mhm.
little, back here was a little bit dry, right? Very kind of light volume,
Yep.
not too many players. But I think after this pump up, it got a little busy, breathed some life into the stocks. Well, that's all I have. Let's move on to the NASDAQ and Bitcoin and coffee, the coffee short, see how that's working, and a couple of other
Y-
things, right?
Yeah, yep.
All right, let me put it back to you. 19197, just like we talked about.
Yep. I mean, look, you can see it's a nice, so we got a
Hmm.
nice two square move
Yeah.
from the highs.
And you said, you mentioned if NASDAQ leading the way down and leading the way back up on the correction, and pretty much on the money.
Yeah, so far, so
Hmm.
far. Here we're chopping around a little bit. You can see we had an up bar, down bar, now an up bar today. If we can't get above 19,925, we're just going to do that. We're going to chop in here, and that would be a sign of real weakness.
Hmm.
I mean, a 50% retrace would be, right up here, 20,642, and that would, show this. That would be perfect, right? Because you have this overhead that would stop it. But let's see what kind of bounce. The first thing we have to do is we got to get, over this 19,925. If we can sit on top of that, then we can push up to this area here. And a 50% retrace would be right about here.
Hmm.
So weak, obviously, highs came in, lower high, and then boom. Now we see what this next counter trend does after this major move down, and based on that, we'll see where, if we get the fat pitch, if we get a real opportunity to sell it, like ideally coming up here and failing, like doing an ABCD up into here and then rolling over would be perfect.
Hmm.
But we'll see how it plays out. Obviously not bullish. High, low, lower high, lower low. And we took all this out. I mean, it may have some trouble here too, Barry, because I mean, look at all this stuff that was over here.
Hmm.
But we'll see. I mean, it was up, what, 2% today? Over 2%. So bear market rallies are the most aggressive rallies you see too. Let's check the weekly. Talking about not finishing, there's an example of not finishing on a weekly basis. So if we get
Hmm.
2, 3 weeks up, then maybe we can go finish and come down and hit that full square, which is the 90.
Right.
If we really get going to the downside, then you're looking at the 15,300. But the whole time we were up here, we said, listen, if we get stuck under 21,000, that's going to be
Yeah.
trouble.
Yeah.
And there it went. You saw
Hmm.
the week that we got stuck under, there's your high, and then boom, and then boom.
Hmm.
The squares do help. Same thing on the monthly, right? We talked about if the month gets stuck under 21, 18,200 is the next target. And so we've got 2 weeks left in the month. We'll see what happens. It would be really something if they got in the next 2 weeks got over 21,000, but who knows? As you said, the market can do anything.
Hmm.
Let's take a look at the calendar day. Found support where we needed to, right on the 270. So we topped out on the 260, shot right down to the 270. Now we want to see, do we get to this 20,600, which is 50% of the square? So now we're in, as we've talked about for the last 2, 3 weeks, we're watching the counter trends. What is this counter trend going to look like? What's the pattern that comes out of it? Is it congestion? Is it an ABCD? Is it really, big ups and downs? Whatever it is, we want to see where it fails. If it fails and gives us a lower high, that's the setup that we're looking for. Anything to add here on the NQs?
No, we're good. Let's see where we go. We're ready.
Yeah. Yeah, yeah. It's just letting price play out now. Let us see the price action. Let us see how it reacts. Speaking of price action, let's take a look at Bitcoin. So Bitcoin, we were talking about this pattern, and when it started to roll over, this was the part where we said you got to be worried when you get stuck under 96, right? Because here we were traversing it. We got stuck at the full square on the top, and then we started, doing 2 weeks of this stuff. And we said, when this resolves, we'll get a move. And there's your move out of it. It's interesting. We have two drives. Do we have one more drive to go here? If we get stuck under 85, I'd say, yeah, we're going to have another push down.
Hmm.
73 would be terrific structure, as you can see. And
Right.
Bitcoin, being Bitcoin, will probably push a little further if it does get down there.
Hmm.
So we just have
Almost
to,
almost the inverse of a gold. Mark,
yeah,
imagine.
yeah, that's true. I mean,
Mhm.
this again, like you were saying, the theme of the show, it doesn't look like this decline is completed.
Completed. Yeah. Yeah.
Maybe if the bounce gets stuck under 85, then it's really weak. Even, better setup for shorts would be if it got stuck under 91 and then rolled over because you have all
Hmm.
this overhead here that you could sell against. So that's Bitcoin daily. Let's take a look at the weekly. Weekly shows now we've got a full bar under the 89.5. So on any counter trend, which let's say we're starting a counter trend if it follows the NQs, which it does a lot, we want to see, do we get stuck under 89,000 on the counter trend?
Hmm.
Can we go up for 2, 3 weeks, inside bar, up bar, inside bar, up bar, but get stuck under here, then the destination's going to be the 71. But we'll see. We'll see how price action plays out. The monthly, I just want to show this again to see, like the magnet here, that's the edge of this circle. Right? You push up and then look at all the lows, Barry, how they're all coming back to the edge of that circle.
Yeah. Yeah.
That for some reason it's an attractor, and it gives, if you when you get the right vibration in the circle, you get this kind of price action.
Hmm.
This here, but this shows that it's a pretty good vibration. And maybe
Also
this
shows
is
56,000 looks like where it's going to slip, slip right down
it,
into.
it can absolutely. I mean, it
Hmm.
certainly looks like we're being pulled into here into the
Yeah.
74.
Uh-huh.
And then if we lose that level, then it's 56. And we come back right into this 6, 7, 8 month consolidation that we went through.
Hmm. Hmm.
So that's Bitcoin. Anything you want to add on Bitcoin?
No, we're good. Looks good.
Okay. On the commodities, corrections and sort of congestions are continuing. The grains are, I don't think they're done yet in terms of the choppiness and the pullback. So we're not going to highlight any of the grains this week. The one interesting one I showed is I haven't showed in a while that potentially is setting up is cotton. Remember, cotton's been going sideways for almost 2 years now.
Hmm.
And it kind of did a little false break last week on the daily. Like it
Hmm.
went down to the bottom of the channel, took out the lows, and then reversed back up. So it's where I want to let the pattern develop a little more and see, is it pushing up to set up a higher low and then a higher high, or is it just, did a false break to get right back in the channel? That's still up for debate, but I thought that was
Hmm.
an interesting thing I wanted to mention. The one I want to highlight in the softs was one we talked about last week. That is a short, and that's coffee.
Hmm.
Let's see what we did this week. I put this ABCD in just so you could see what is potentially a move that it's doing. But you can see in the week we tried multiple times this week to go higher, and yet we kept pushing lower. The next big test here is this 366 level. I fully expect we'll test it this week. If we do, we want to see it break, right? We want to see
Hmm.
get through it and then come back and get stuck under it. And then that means we're really going, potentially down to the 320 level. But this week, Barry and I were talking. I was like, man, it's a little choppy. I don't want to get caught up in this sort of congestion and this back and forth choppiness. I want to see, these lows get taken out. And then the
Hmm.
end of the week, last 2 days, we had weakness at the end of the day. So
Hmm.
I think that this coming week's going to be a telltale sign about what's going on here. Anything else? I know you looked at coffee and you're in the coffee. What are your thoughts here in the daily?
Well, I think stay the course. I mean, at least at a minimum, we have a couple of ABCDs pointing, giving us targets. So we'll watch those. But the
Mhm.
366 is obviously the level to get taken out. So once that goes, opens up a lot of things.
Then it's we.
It opens up a lot of things. Yeah.
Yeah, so we'll see. Let's take a look at the weekly. Here's the weekly. The good thing about the weekly is we reversed the up bar from last week.
Hmm.
and we took out the low. So we do have a weekly reversal. We got to close below 384, which is 50% of the square here. Here, in the daily, we said it's 361. Here, it's right in the same area, 358. So that's going to be a big number, both weekly and daily basis. We get
Hmm.
through that, then we're rolling, and the short will really, really pick up steam. Let's take a look at the monthly. Monthly, what I'm happy to see is that you know, last month we pushed up. We tried to get a close over 400, couldn't do it. This month we tried again, a lower high. Again, we're well below the 400 level. We'll see how it closes. Ideally, we get a reversal, right? We take out the previous monthly low, which was 366, right? That number, 366. So if we can take out that low, we'll have a monthly reversal as well, and that'll
Hmm.
add some more momentum to the trade.
Hmm.
All in all, the setup looks good. Nothing, another week of price action didn't change our minds, didn't change our bias here. The next big point is 366. So that's the number to watch this week to see if we can get below that. And that's coffee. Anything else to add, Barry?
No, we're good.
All right, let's go check the last one that we got. And that's silver. Silver is interesting. You were talking, I forget what market you were talking. Oh, it's copper. You were saying it was sort of that flat top triangle.
Hmm. The big one.
T-
Yeah.
Yeah, take a look at this.
Yeah.
Very similar, right?
Yep.
So the big move this week was we tested this full square at 32.50
Hmm.
and then pushed hard off of it. Now what we want to see is we want to see this high taken out, and ultimately we want to see, get up to 36 and a quarter, and can we get on top of the half square there?
Hmm.
We do that, it opens up 40. And looking at it, it could be, like it's starting to curl, that curl we look for on
Yep.
these patterns.
Hmm.
You're starting to get that curl where momentum could really start kicking in. Obviously, the previous highs around 35 are going to be important.
Hmm.
We at least want to get on top of that and sit on top of that. But then 36 and a quarter at the 50% of the square is the next important spot.
Hmm.
Everything's good here as long as we're on top of this full square, this 3250.
Right.
You can see that high, 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 high. It's been a battleground, as you can see.
Hmm.
And this looks like, it's trying to leave the scene of the crime and head to new territory. But we'll see. It's got to follow through. Let's look at the weekly. Well, there's another weekly close on a pretty important spot, right?
Yep.
So 34.32 is this 50% of the square. And we closed at 34.36. So we're right there. Next week, what we'd love to see is we get a full bar above the 50% of the square, and
Hmm.
that opens up 36 and a half. But we were in this sort of big triangle that we were talking about, couldn't break out of it, couldn't break out. And it looks like this week might have been the move to break out of that triangle. We tested it and then went. And this thing, as you can see, it likes triangles.
Yeah.
When they break, it goes. So let's see. Momentum can kick in any time on this thing,
Hmm.
given the pattern. Let's look at the monthly. Key level on the monthly we talked about was this 2666, which we tested
Hmm.
on this little pullback. And now we're sort of, it's not, sexy or anything, but it's grinding and it's
Hmm.
pushing.
Right. Right.
And remember, these are monthly bars. And the key thing here is when we tested this here, we're sitting on top of 8, 9 years of price action. Actually, more than that, 10, 11 years of price action. It goes back to like
Hmm.
2013. And we're sitting on top of all this. So that was a big test because if we
Yeah.
got back into this, it was going to be, more muck, which we did for 3, 4 years here. So that we got that test and now we're pushing. So what do we want to see? We want to see these highs get taken out. We showed those on the weekly, that 35 area. and then it's attacking the half square. Ultimately, once we get on top of the half square, then you're looking at 50 silver.
Hmm. Hmm.
And it's not far-fetched. Silver does move with gold, but there's a bit of a lag. Gold's had the big move. Is it silver's time now? I think the reason I'm highlighting it is, there's a chance that that momentum is starting to move into this asset here.
Hmm.
As I said, it lags gold, but it's starting. What are your views here on silver, Barry?
Well, I think we're in a bull market, so that's that. And long
Yeah,
as we're holding that trend line, I mean, the short term, right? We have a nice trend line. We're above 32.50. We're in pretty good shape. Only thing is that what we looked at on the weekly charts and whatnot, we want to be able to actually break the next level and be able to hold above. So
yeah, we want to clear this.
there you go. Yeah.
That's what we want to clear.
Mm-hmm.
That
What's that?
30,
34,
that
34.30. Yeah. 32.
3430 is really, really important there.
Mm-hmm.
We clear that, and then you get the weekly momentum, and then the monthly will follow, and then you get firing on all engines type of thing.
And if we get up into that square, that could be our three drives and maybe a little correction before anything else.
Yeah, yeah, I could see that. One drive here, second drive there, and we get up
Third,
here, it'll be
mhm.
third. It would be great if we could do it on the timing too. What is
Yeah,
that?
well,
April 11th?
not too far.
Not too far. Not too far is right.
Mhm.
So let's see. Let's see. That's it for me on the commodities. You covered nat gas. I think we're correcting there. Crude is
Mhm.
sideways. Copper looks good, but I didn't want to go into that just simply because you cover the copper. The I think the key topic I wanted to talk about with you, Barry, is
Mhm.
given where we are in the ES, right? We've and the S&P, we made the calls that okay, the top was in. Here's your first strong move down, and now we think there's a decent bottom and a good counter trends coming. How do you as a trader put in your mind that the overall trend is negative now, right? The trend is down,
Mhm.
but we're in a counter trend. So how do you mentally justify taking longs and taking long positions? What is the mindset or how you sort of compartmentalize the different time frames as you trade?
Well, this is a very good question, and for me, it's really about the time frames that I trade. Mostly look at 4 hour and 30 minute. Of course, shorter time frames based on the fuse line. So if you look at it, it's very short term, and in the short term, you can take the long side, the bullish setups and the signals. My requirement is that the low comes in at a good level. If I can sort of say, okay, this is the good low, then from there we can trade till the resistance.
Right. So you're
And
not trying to buy the bottom all the way down,
no, no,
right?
hardly.
Because there's a lot of people that were trying to buy this dip all the way down.
I don't know where that is in the trading rule book. Like nobody says if you don't buy the bottom, you don't make any money. Actually,
Right, right,
or you have to
right.
sell the top or you're not going to make any money. I don't know who brings these in, but there's nothing to it. You just wait till something's established and you wait for the setups in the other direction. Now, not to make it sound too simple, but I think, we talk about a systematic approach. So if you have setups that you trust, which means your system, then once you can sort of confirm the low is good, like we looked at a 30-minute chart and the lows came in exactly where we wanted to see them. And once you did that, then you can trade the long side on the signals that you get. Unless you have a good low, meaning it either squares out or it holds a really good level and the price action reflects that. So in this case, yesterday, we had that false break and we talked about how that could be, well, we had that little dip, right? We made new
Hmm.
lows and everybody was, in a panic. And we said, well, that looked like a false break. And if that's the case, well, the proof is that then it's going to be a blistering move to the upside. And you can see the pattern overnight, yesterday, even and the overnight was, it was okay. It changed. It wasn't the same. And then this morning we had a good follow through. So I think it's two things. One is your system, obviously. Second thing is you want to make sure that you understand in whatever frame that you look at the markets and time frames, the lower the high in the high that's in place or the low that's in place comes through in a way that you can trust. And then you want the market to prove that by the price action. So I think, once you have a couple of those two, three things set up where you can validate the things, sort of like milestones or road signs.
Hmm.
Once you have those in place, then you just take the new side, knowing it's not forever. We're just running this up to the next resistance level. And that's pretty much how these squares work, right? Once you bounce off of a square,
Hmm.
you're pretty good till 50% of the next side, the other side of the square. Once we get through that next one. So it's sort of like stair stepping. But in corners, I guess the main thing is to sort of be able to confirm and trust that your work is able to, frame a high or low as a turning potential change in trend. And
Right.
then you
So
then you wait for the, price action to follow through, show you that.
right. So in the current situation, even though you're taking longs and the long setups, in your mind, you're always knowing that, hey, I got to keep a short leash on these because the major trend is still down.
Absolutely. So now I'm not saying anybody should do that. This is just what we do because we have to do this day in and day out. The thing is, you have to, I mean, obviously you have to hold multiple views of the things, different time frames. So if you look
Sure.
at a weekly, we're down, daily, we're down. And this is a good question because I think if it wasn't for the squares and some of the tools that we use, I wouldn't really know. Is that really a low? And how do I know it's not going to go down tomorrow?
Mhm.
And like I said, like we looked at it today, yeah, the move today was okay because the 30 minutes set up correctly, but it had this unfinished sort of look on the daily charts, if you notice. So there's no telling
Mhm.
Monday, St. Patrick's Day while everybody's at the pub, the whole thing can just slip slip off the side and,
Right.
start back down again and
Right.
potentially down into FOMC. So I think all of these things add up. So while you're taking a long trade today, obviously you're watching, the bigger picture and see where things can go. And I think, if we stall, we have some key levels we talked about on the 30 minutes. You want to make sure those can be held because if you start slipping, we could easily go down and test the lows or even maybe make new lows and complete some of those levels we saw on the daily chart.
For example, like last summer when the trend was up, if we were taking shorts, it was again, you got to keep a tight leash on it and you only do the setups where we have, squares saying, hey, this is a good end. We should have some sort of pullback, minimum ABCD or something like that. So you have to be aware of the overall picture so you understand that short-term trade you're taking, what the characteristics you're looking for. You're not looking for a 3-week move. You're looking for a quick in and out, take advantage of the correction. Is that accurate?
Yeah, I would say in and out. And you also want to leave runners in there because we never know. The market does all kinds of things. But I think look at the feedback. Are we holding levels? Are we holding the trend lines? Are we holding fuse levels? Whatever tools that we have uh, to make sure that the trend is continuing. And we want to
Hmm.
know when the trend is starting to peter out because then we know, okay, it's time to bail. If it's stalling at resistance, the price action changes, and that's pretty much when we want to shift gears, like, okay, I better protect some of what I have and shift gears because we could, catch a downdraft or whatnot. But I think it's a combination of things, right? It's not one thing. I think the squares help us simplify the way we talk about markets, but we're also looking at the patterns, we're looking at other geometry, and we're looking at counts. So there are a lot of things that can go into it. But overall, the idea is, yeah, you can take counter trend trades, but watch your back and your front.
Right, because
Hmm.
you're swimming against the major tide, and that's the point.
Hmm. Hmm.
And what
It
you
did,
said it also was very interesting. When your short-term trade, let's say your short-term counter trade starts running into resistance or having trouble, you got to think bigger picture too. Hey, I better look at my bigger time frame because this could be rolling over for that bigger move down coming.
exactly, absolutely. And in our case, like speaking of the S&P, let's say these fuse lines help a lot. Normally, we post what a morning and an afternoon one,
Sure.
and if we can hold above, then great, market's burning, right? Burn, it's just gonna go and go and go. If we fail or if we start dropping below these levels, then you just back off. It's the same game, but in a shorter time.
Right.
And in the bigger, you definitely want to be careful. And also where you are in the in the in the phase also matters. Are you like right now we're at the beginning. Like we don't even know if this is the beginning or just a little 1 day, 2 day
Blip.
move,
Right.
flip
Right.
blip, right? So we don't know. As soon as you identify the phase, well, we know the down phase is sort of we're coming towards the end, like we know it can't go much longer. Meaning, that's why we talk about the fat pitch trade. We want to take the
Right.
trades early on because we know we want to catch that third leg. Normally there's
Hmm.
a 1, 2, 3,
Yep.
and we want to catch the third. So the idea is that now once the third is spent, then it gets really tricky. Then I'd be very, very definitely on a short leash because those fourths can get into triangles and expanding triangles. They get super messy, and you end up giving back all the money that you made on the third.
Correct.
So I think the phase comes into play, like 1, 2, and the third is okay. Those you can trade really well. But the fourth, you want to be careful. And then how we finish up the fourth with a failure of fifth or going to the fifth or A, B, C, D into that, and then starting fresh again. So all of those phases, you have to kind of mentally have an idea, like, okay, now we're here. So I have to really be careful. Like you don't want to short at the bottom when you're going to get snapped out in the next day. Like let's say somebody was selling it yesterday, thinking, oh my God, it's going to go lower. Well, they got their head handed to them today,
Right.
right?
Right.
So why?
Yeah.
Well, because we're coming towards the end of that. We started, you know, sort of, you brushing against support, and that's when you want to sort of back off and not get not be so
Aggressive.
bold. Yeah,
Yeah.
aggressive, exactly. But the first few legs is fine. The two is top of the two is or the bottom of the two is the best part. We always talk about that because
Sure.
that's where you can catch it and really trade that. So
And
anyway.
and the reason I asked the question is I know at first I struggled with that because
Hmm.
we say, well, we had these huge cycles, the market's going to be down, and yet you still have to look at, where are you in the initial move, right? Is this the initial move? Okay, we got the initial move. It looks like it's done or close to being done to where the risk reward's not there to be shorting anymore.
Hmm.
And if you have good setups, you can go long. But
Exactly.
we have to keep in not the back of your mind, but in the front of your mind that the major trend, because of the major cycles that we had and everything that we've been talking about for months, on these podcasts,
Hmm.
it has turned. And
Right.
it's not a small cycle. It wasn't a 30-minute cycle. It was weeklies and monthlies. So it
Right.
takes time to resolve those.
Exactly. And you can see how the narrative's changing, right? While we were at the highs, it was one thing. Middle
Yep.
way, it was another thing. At the bottom, it's a whole nother thing. Now we're going, on the counter trend, you'll hear another talk, all kinds of talk going down. And on the next turn down, it'll be a whole nother narrative. So it just, narratives like, it's like the weather, it'll keep changing, but your technical stuff has to stay in place and it'll guide you. But you have to have that kind of a scope, right? Like what's the phase? Where are we in the phase? What are we dealing with? Like on the weekly, now we're really hoping for a good counter trend and a reversal because that would work well. Is that going to happen? Can we go to new highs? Sure, but we're not going to die because of that. It's just
Right.
if it
Right.
happens, great, we'll trade it. But the ideal scenario would be a nice weekly lower high where we can reverse off of. So
And now exactly. And we'll leave it at
yeah,
that. Listen,
and that
everybody,
if we
go ahead.
get if we do get a reversal off of it weekly, that third coming down, I probably won't be buying,
No,
no matter
no.
what, because
You
that
you
typically
won't.
finishes up,
Yeah,
right?
you don't want to try and trade the wiggles on that because
No,
that's a big, it's like
right,
a big time frame, big wave, right? You
right,
want to just
exactly.
ride it. You
Yep.
just ride it. No, that's
Hmm.
very helpful, Barry. I appreciate the insight you give to that because I do think it's, especially for new traders, it's difficult to, switch time frames and understand phases, as you said, in the different time frames. So we'll keep talking about it because I
Hmm.
think it's helpful. It's not only helpful for new people, it's helpful for me. It's helpful for you to go over this stuff and remember it and put it into practice.
And a
Anyway,
lot of this stuff, and I was going to say a lot of this stuff, unless we talk about it, we kind of tend to forget it because it's sort of second nature for us after
yeah,
a while. And you don't talk about it, you just do things till somebody questions it. Then you have to think of it like, oh, why do I do that? So,
yeah, and it's
anyway,
good.
yeah, yeah, it's good, all good.
It's good. Listen, everybody, thanks for listening. Thanks for watching the podcast. We really appreciate the support. Please, sign up for the alerts, subscribe, send the links to your friends, and help us grow the channel.
And comment,
And
let us know
and
what to do, how
yeah,
we're doing.
comments are great. Yep, if we can do
Hmm.
something different, we'll be glad to try. We appreciate your support. Rest up again. It's not going to be boring. You got St.
Mm-mm.
Patrick's Day and FOMC next week, so rest up, and we'll talk to you next week. Take care, everybody.
Thanks, Ben. Good job. We'll talk to you midweek, maybe midweek.
Yeah, we'll see what's up. Thanks so
All right.
much.
Thanks.
Bye
Bye
bye.
bye.